Good day, coach.
Hey, Kwame. How's it going?
Yeah, too bad. How's it going? Busy.
Believe it or not, before people jump on this call, yeah? After this, so I have this call now from 6. I'm aiming for 1.5 hours or something. So let's say 6 to 8. 6 to 8, this call. Then 8 to 10, I have my family siblings just to talk about the funeral and stuff. Then 10 to 11 with the designer of the brochure and the program to finalize a couple of things. And this is how my days have been for the past 2 weeks. From one meeting to the other, just to get things ready. Tomorrow by 2 o'clock, I'm on the plane to the eastern part of Nigeria for a couple of days, and then I'm back to Lagos. The whole thing continues. So it is crazy for me this period, but it is what it is. It's not unusual. It's not a special case. Some people have the same sort of thing. So no need to make too much noise about it. But how are you guys? How are you yourself? Can you all hear me?
I can hear you, Coach. Can you hear me?
Yes, I hear you. Hey, Yovan. I hear you, Mike.
Everything okay with you?
Yeah, doing all right.
Godspeed.
Sorry?
Godspeed.
Awesome. Thank you very much. Thank you very much.
Yes.
I can't get through to Dominic because I'm not sure what's happened with the messages. With the the emails out to everyone. Right. So let's see. Let's get this go. No, that's the wrong one. I clicked the wrong thing. Right. Hey, Butch. How's it going? I see you guys doing some interesting stuff. I see you doing some interesting stuff. Yeah. Making the
on the VIX.
Yeah, earning the money and taking the money off.
I think I see best setups around that time. Most times I see the crosses and all around that 536.
Yes. So what informs your wanting to take out the money almost immediately?
There are some things I'm gathering for. That's why I because of the way it rolls and all that, I said to myself, I have to have a fix. Once I make any profit, take it out, have that trade with a certain fixed stuff.
Yes. Bell me, Dominic is ringing me. Let me just know what's.
All right.
Sorry, guys. I just wanted to know what's happening with the mail system. It looks like there's some problems with the mail system. And Dominic is saying. So as I'm talking to you now, I'm trying to
Yeah, I think there's a
to send the mail out. So bear with me for a second as this goes out. I don't like to hear that sound, you know, the MT4 sound. It just gets in my head. And I just don't like, yeah, see, it just keeps coming on and off. Is again because of the internet connection is not that great. All right, so I'm almost there. I'm almost there. Yeah. Okay, so we can roll with this now. Right, so what would anybody want me to show today? Because what I want to do today is really a way to get the new folks to kind of get used to some of the terms and some of the ways we might look at trading and stuff. Yeah, but then it will be good to know if there are any specific questions that somebody wants me to answer, that I can cover it in the session for you. Right, so questions?
Coach, I know I'll start the ball rolling. So my question to you is, when you start your trading day, I've realized just to start maybe a half an hour before the London time, but then I realized I started 2 hours earlier than the London time, and I started seeing better opportunities than I did see, obviously, half an hour before. Is that, would it be something that you would recommend to do it a little bit earlier than London time?
Actually, good question. The reality is there are certain times of the trading day when more activity tends to happen. And doesn't mean that other times you cannot take trades. It just means that, don't mind me, you see, when end of the month like this, money start to fly up and down. So I've just made a transfer from with perfect money from one of my trading accounts, and that's the guy making the transfer. Yeah, so there are certain days and certain times in the trading day that you have more activity. So at the start of the London session, at the start of the New York session, you will get some higher levels of transactions and activity. So those things naturally happen. So if you're looking at it from a UK perspective, you're looking at a time between 7, 8, sometimes 6 a.m. UK time to about 9 o'clock. But a lot of activities actually happen between 7 a.m. And 9 o'clock. Then the next time is around 1 o'clock to 4 o'clock. And then the peak of that time is usually around 2:30 UK time. And then another time to also watch out is around 7 p.m. to about 9 p.m. Because again, the New York session is shutting down, closing, and all those sort of things are happening at that time. And we're getting close to the end of the trading day. And so, yes, in essence, you can do things like that, but just know that some activities happen more often. Doesn't mean it doesn't happen at other times. Just more often will take place at certain times of the day. I don't know if that makes sense.
Yeah, that's correct. Yeah.
So if you found that around that time early, you get very good opportunities, and just keep doing it. I think that's the same thing Buchi just said. That he found at particular, I'm not sure what time Buchi said he finds it. He finds that he gets a lot of the crosses happen at that time.
Around between 5 and 6, I see most times the crosses
So 5 and
That
6
time.
a.m. you mean, yeah?
Yes.
So
Yes.
that's
Nigerian time.
So right now it's the same as UK time, 5 a.m. to 6 a.m. Yes, especially if you're looking at the synthetic indices. Especially synthetic indices. Sorry guys, I just need to send this. Right, so where is the link to the meeting? Right. But Mike, that answered the question, right?
Yes, thank you, Coach. Yeah, that's fine. Yeah, yeah, that's good. That's good.
Okay. So, any other question? Any other question?
Coach, sometimes when you have setups
Yes.
that are good, especially on the Forex pairs,
Yes.
and you set it and you want to allow the trade run,
Yes.
and let's say if you set it at 1 hour time frame, so you check it at 1 hour time frame. Sometimes you see your trade go into profits.
Yes.
Then before that time, or just close to that time, you see yourself stopped out. Possibly, I usually give minimum of 25 pips, depending on the kind of pair and the way it moves. I give between 25 pips and 35 pips.
Right.
Sometimes it gets stopped out. So other times, when I see it going to, how will I put it? Something like 15 pips,
Yeah.
and I put it at break-even point.
Yeah. It comes back and takes you out at the break-even.
It comes out and takes me out and continues to go up again. So so in that situation, how do you manage it? If for instance, when I'm trading with a small account, for instance, the best I can do is a 0.1. So if you now do 0.01, when you now get to 15 pips and you want to move to break even, I can't take partial profits. That's my challenge.
Yeah, that's
understand. So when
you have to live with that challenge because you're using smaller slot size. So you can either take your profit at 15 pips or you push the trade and maybe babysit the trade, trailing it. So you can do something like that as well. Trailing it. You can use the trade manager and see that whether you're there or not, it will start to trail the stop loss for you if you choose a stop loss of trailing of maybe 20 pips away from entry. So as price is going up, it just keeps trailing it for you. So you can do things like that, or you just babysit it yourself until your account grows a bit more. Or until you're paying more money, because the way you're doing it, you're making it taking out. So
no. On the synthetic indices, that's my strategy I've devised for it. That's
okay. If that's what you feel you should be doing, that's okay. Nothing wrong with that. If that works for you, you just need to be aware that you're not really having capital growth on that. All you're doing is just taking care.
Yeah, I know.
Nothing wrong with that. Just a way of trading, yeah. Yeah. Any other question? I don't like to hear
it. Coach, a good one, Coach, is looking at FX books. Now, I've been looking at my FX books, looking at my trade wins and losses.
Yes.
And I must admit I've fallen foul to the idea that you win, but your profit is not as strong as your you know, is the losses are like you said, the risk management. It's getting better now. I'm starting to see more green in the FX book, but
yeah, and you've got to realize that again, remember there are two schools of thought. Yeah, you can take profit by taking high probability setups or by high reward. Yeah. So high reward is where you see your reward always. So people that talk about 2 to 1, 5 to 1, 10 to 1. So people say those sort of things. And that's high reward. So high reward to risk is one way of taking profit. Now, a lot of people use it as a way of taking profit, but that's not the only way to take profit. You can take profit by high probability. Now, high probability does not necessarily need to be 2 to 1. So if you have a system that wins 80% of the time, then even if you lost 1 out of, if you lost 2 out of 8, and you manage the risk in such a way that it's not necessarily 2 to 1, but maybe 1 to 1, you will still be profitable, very profitable, when you have a situation like that. But then the best is to have both. So where you have a high probability setup that is also complemented by high reward, that's the best place to be. But you can use either. And so when you're using high probability setups, you might see that you might have your probability of success, or your what's it called now, your profitability is 80%. Then when you look at the size of your losses, you might have them as an average of, say, your losses might be $30, but the average size of your profit might be $15 or $20. Now that's the average win is smaller, but you have more of it. Does that make sense?
yeah, it's just confusing in my effort where where I've got wins, but I'm still winning more than I'm losing. But obviously, I can see the
But are
minus.
you cumulatively profitable?
I'm getting there now. I'm building back. Yeah, I'm building back.
So when you add all your wins and your losses, are you in profit?
No, not yet.
Okay, so that means you need to work on getting to profitability first.
Okay.
Yes. So you need to, like you said, you need to see more greens. And what needs to happen is those greens need to be, or you need to start reducing the size of the reds as you're growing the number of the greens.
Yeah.
Yeah. So
Okay.
that's these things are a process. You know, what I can do for you, like your mentor, is I can guide you, but I will never ever, no mentor will be able to go through the process for you. And this is not just for Mike, this is for everybody. Everybody has to go through the process. My mentors can show me the way, but they can't walk the process for me. So I have to walk the process of how to find clients like you.
Yeah.
So I have to walk that process. I have to find a way to reach out to more people. There are more Africans, there are more Europeans, there are more Americans that I can reach. There are more people who can benefit from the way I coach. I've got to find a way of reaching them. Do you understand? Now, my mentors can show me what to do to reach those people, but I still have to reach them, because ultimately my purpose is to impact folks.
Yeah,
but the
and you do.
And the strategy I have to roll. I can be shown it, but I have to walk it.
Yeah.
So in your trading as well, which is what I'm doing for you, for every one of us here, is I've got to show you the way. And that's why, as quickly as I encourage everyone, as quickly as you can, get on to practicing trading. Because the only way you can get through the process is by practice. You will learn the theory, you will see, and there is no way. In fact, I thought to myself I would do this today. Let me get my in the midst of all this, let me get my writing tool up. I have a couple of trades open. Right, so let's share the screen now. I like to hear that. In fact, I'm going to mute I'm going to show you how to mute this if you want to mute it. So let's share the screen first. Oh, there's a guy that I might be able to, in the next couple of months, I might be able to have some collaborations with. I just hope I can have you all be able to come on it. Because this guy has got a model for some of the things I want to do in Africa, where we can have a fund, a kind of a fund for Africans, not for Africa, a fund that will be that we facing towards Africa to help educate people, help invest in businesses, just to help people do the things that they wish they could do, as it were. Can you see my screen? Which of my screens can you see?
Your browser with
okay, the one that has the Sydney time, yeah?
Yeah. Okay.
Right. So that's the one, because I was searching for, I have a call with a guy at 8 a.m. Sydney time, and it's 23. This is on the 4th or 5th of August. So I was just checking this time out. Right. So where's my writing tool? Whiteboard. Link. Right. Okay. So you can see my screen, right?
Yes, you can.
Awesome. Let me see the chat messages. Yes. Oh, Haniba. How is Ghana? I'd like to see. Okay. So remember this. This is my tool here. Or this framework. No. I like frameworks. Oh, did you hear that sound? That sound tells me that I can exit a position that I wanted to exit. So I don't know if some of you do this, but I actually do something that if when I'm manually trading and I don't necessarily want to be watching price, I set alerts. And this might be useful for some of you. I set alerts on the chart. I set alerts on the chart. So you can see, for instance, here, I've got USD, US 30. Yeah. And there's an alert there that says that once price, in fact, let's go to, I'm going to do this now. Let's, yeah. Because the alerts can allow you to, like now, allow me to do certain things in certain ways. So you can see here, I've got the alert, and I've set to the alert that once bid price goes above 35153, I want it to start beeping. And you can see now it is 35154. So as long as price is above 35153, I will keep hearing this sound, as it were. But then I can cancel it. I can delete it. Save my ears. And so you can do that. So you can carry on doing everything else. So you're watching, you've looked at the opportunity you want to take the trade on, and you see where you anticipate price to get to. You can just get into the trade and then come here into the alerts tab, right click and create. And here you now have, you can choose whether it's a sound or a file, an email, a notification, whatever. And then you want to select the symbol. So in this case, I can select this and I can ask it to give us an alert, different types of alerts. But I just use the default. I don't mess about with that. You can also make it expire. Then you can either say when bid is below, when bid is below, when bid is above, or when ask is below, when time is equal to. So if you want to also take trades at a particular time, then you can also use this as when time is equal to. You can then add the value when time is equal to whatever. But I usually use it only for price. If price gets to a particular place, I want to take a particular action. And so you can do that. And once you do that, I can now say when bid is above 33500. Come on, this one let me up. Come on. I can't see my mouse anymore. Can't find my mouse. The mouse is gone on this screen, but I see it on, okay, it's fine. Right, so, who feels sometimes like this to just take your computer and chuck it in the bin? So 350, I can ask it that when price gets to 3500, when bid is above, give me an alert, and then I can go okay. So price is above 35, so I need to change that actually. Modify. I can ask it if price is above 36. Okay. So I've asked it now if price is above 36 and do that. Now if I go down to a smaller time frame, I can probably much easier see it. Where's 36? So if I get this down, can you see this arrow here? This yellow arrow. That's the alert. So I can actually click and move it up and down if I want. I can move it back down here, and things like that. So that's another thing I didn't say the last time we had the MT4 hack call. I don't need this anymore, so take that. That'll be useful to some of you. I use it myself. Yeah. Was that okay?
Yes.
Awesome.
Yes, it was. Yeah.
Yeah, awesome. So I was going to talk about this framework here. Yeah. Everybody goes from here, the UI, to CI, to CC, to UC. Some of you already know what this is. So the learning, everybody's learning process or learning phases start from not knowing what you don't know. Because when you don't know something, you don't even know you don't know it. So you don't know until someone then makes you aware. So you either read a book, you watch something, or you see an ad, or someone shows you something and suddenly you become aware. So once you become aware, you realize you don't know so much. So when you are at UI, you are unconsciously incompetent of that subject matter. The moment you become aware, you're now conscious that this thing exists, but I don't know much about it. I'm going to silence this. So the other things you can also do to to silence you. You can go to tools, options, and you can see, where is it? Events. I can disable the events and I won't hear that sound. Even if I have my connection cut out, I can just go okay. Same thing here. Tools, options. Oh, this is not even on because I don't like it. And then the last one is this one here. There was a gap today, you know. So let's go into charts, tools, options, events. If you do this, disable it, then you won't hear the alerts when they happen. So just remember that. The reason why I'm doing this is that I don't want it distracting me on during the session. So I will put it back once I'm done. Okay, so everyone goes from unconscious incompetency to conscious incompetency, where you don't now realize I don't know this stuff. And then you start to seek to learn, you start to watch videos, you start to attend sessions, you start to sign up to a club like ours, and things like that. That's the process. Or you register, or you sign up to a master's degree or bachelor's degree or even a PhD somewhere. And that's what drives you to do that. But then once you start to learn, and you start to apply, you then become consciously competent. That's where most of you are at. And most of you are at a place of conscious competency where you have to actually think about it to be able to spot the opportunities in the market. So you've got to concentrate. You've got to really think to see them. Now, the more you do that, the more you practice, the more you apply yourself. So you go from knowledge, and when you apply the knowledge, you're developing skill. And as you develop the skill, you use the skill better, you apply the skill. That is what then leads you to higher competencies. So, but where's that one coming from? What platform have I got? Okay, I've got this other platform as well. So I've got this other platform as well. It's probably giving me that sound. Tools, options. Yes, I got here. Okay. Yeah. So you've got to go through that process. So I will guide you, but you have to do some of this. So some of our new folks, bear that in mind, please. But you're in a safe place. We'll hold your hands, we'll guide you. But you've got to really do the work. Like some of the guys are. You can see some of the guys are Bucci had some fire up his backside from June. He says, no, I must do this now. You know, and you can see him now. He's always known the things he's doing now, by the way. What is happening is he's just practicing and applying more than he was doing before. And that's just, I know that. I'm not saying it to impress him. I know that because all of us are like that. There are certain things that my mentors want me to be doing that is the same thing. I've got to just keep doing them over and over to just get better at them. And so in this case as well, you guys have got to make more money or to earn more money in the market. You've got to actually do it, because when you do it, the questions then start. And when the questions start and you're getting answers from the group, from myself, from members and fellow members, and then you can start to rise, as it were. Okay. And then my mentor, Tony Robbins, will always say that repetition is the mother of skill. What does that mean? I've got to keep repeating the action. I've got to keep doing it. And that's how skill goes. And that's what I call practice. And re-practice, and then relearn and practice more. That's what that is all about. Repetition is the mother of skill. So I'm going to go from the basics and think I'm going to actually talk about the wave strategy, just the basics of that. And then hopefully some of you will pick up on some of this as it were. You will see something new, trust me. Even if you've been doing this, you will see something. Even me, I see new things. On my own strategy, I'm seeing new things every time. I just look at the chart, I'm seeing something new. Boy, oh boy. And I'm saying to myself, why haven't I been doing this? And so I have to spend a couple of weeks, probably months, to actually then develop certain rules around it for consistency. I'm biased more to higher probability, which is more consistency really for me than anything else, as it were, just the way I operate. So other people like to gamble, so they want the high reward much more than the probability. That I prefer probability. It is what it is. Now, so a lot of people who, let me see, I've got about how many people here now? 33 of us here. Who is not in the club? Just help me and just raise your hand so I know what to and how to actually to make sure you get some value even if you're not in the club. It's just that's what I'm trying to do here. Oh, so who is Galaxy S8?
Okay. I'm new here. I'm Galaxy S8. My name is Kenneth.
Your name is what, Kenny?
Kenneth.
Kenneth. Okay, I've got to change. I just rename your on my screen so I know who I'm speaking with. So Kenneth. Okay, so I've got Ndayoka, Kenneth, Frank, Daniel, Joseph. Yeah. Okay. Yeah. The reason I asked that question is because I'm gonna go really, really basic on stuff. Some of you, whether you're in Africa or anywhere else, if you're in Africa, then you'll understand the normal market situation in Africa. If you're not in Africa, then you know about the the car boot sales or open door markets. Yeah, open door market is called, yeah. Similar things happen. So where you don't just go into the shop and pay the price tag on the shelf, you kind of haggle a bit to get the sort of pricing level you will want to have. So that's where I'm going to start with. So I usually see at this point, most of us will know about some of those men or women in the market who sell things like I usually use tomatoes. And so you will get a bowl of tomatoes, and I'm going to use a Nigerian currency here, the Nigerian currency here. And you get a bowl of tomato. This one basically might be going for 500 naira per bowl. And that bowl might be maybe 500 grams or 1 kilo, whatever, 500 naira. That's what you typically will buy them. Now, let's say this man called Oga Tony. So Oga Tony in the market sells tomatoes, and typically Oga Tony will start will open his shop and set his stall up at say 6 a.m. and he will still be there till about 6 p.m. That's typical. Now, when you look at this, that is a 12-hour period that Oga Tony will be doing his trading, his business, selling tomatoes. Now, remember that 500 naira is what is typical. So the first person comes around and he pays 500. Then sometime between 6 a.m. to 7 a.m., another person comes in, he pays, and they pay 550. Another person comes in, they can haggle and pay 480. Then it just continues that way. But everything is around the 500 mark, 550, 470. Yeah, but then sometime midday, somebody comes in, drives in with some nice cars, drives past with a nice car, and then someone steps out, nice shoes, and like is usual with people like Tony, who is just a market trader, when he looks at the person and sizes the person up, what do you think Tony will do? Obviously, Tony will try to get a bit more from that person in pricing. And so what does Tony do? Tony says, okay, I'm going to try and get 750 from this person. And he says 750, and the person is in a hurry, they pay 750. But then he continues to sell 550, 530, 480. And then suddenly he sees someone that comes around and asks him, oh, Tony, please, I don't have money today. Can you help me out? Can you help me out? Things are not very great now. And Tony, being a nice man, decides to sell it at 350 to them, because all day he has made a bit of money, bit of profit, so he wants to give back. So he's a nice man. But then he continues to sell 500, 500, 500, yeah? And the end of the day, he then sells the last one at 650, yeah? Does this make sense to everybody? Give me some feedback, please, in the chat box, or just say something. Does this make sense? Does this look like something that is possible? Yeah? Feedback.
Yes, coach.
Yeah, thank you. I like feedback. I feed on feedback. Yeah, but it makes sense. Thank you. Joseph, thank you. Thank you, Mike. Thank you, Daniel. Because the reality is this: where energy flows, or what do they say? Where focus is, energy flows. So I've got to make sure that because you only learn when there is energy. So yes, thank you, Baba. Thank you, Mabel. Hey, Mabel, how's it going? Settling in okay. Yeah. Thank you for those of you participating. Thank you, James. Awesome. So yes, so that's typical what will happen. But what do you notice in all these things? When Tony started his business, he had a starting price. That's what I will call open price. That was his open price of the day. And by the way, after this 6 p.m., the next day, he starts again at another 6 a.m. And then that he has to start with a price. He knows that the average price is 500. So he will start maybe around 570. Or maybe he says, oh, I could have sold more. Let me start from 600 the next day. You get? So he will be, the next day continues here. Yeah. But then he has the open price. And then he has all these transactions happen during the day. But then there was a price that was like an outlier up. That is the highest price of the day or of the period. And I'll call that high price. And then there was a price that was the lowest. So no other price was lower than it. And that is what I'll call the low price of the period. And remember, the period in this case is what? 12 hours. Yeah? And then there was the price that he finished at. So that was the last price of the day. That is what I will call the close price. Right? So when you look at those things now, you will notice that Tony has got 4 distinct price parameters. And that's what is called the OHLC, the open, high, low, close of price. Open, high, low, close of price. When you look at your trading platform, let's take a look at your trading platform. Let me actually close this up. When you look at your trading platform, and you look here, it's blank, but once I get in here, can you see? It has this thing here, date, open, high, low, close, and one more, volume. So there is what I call the 4 parameters of price. If you do not understand the 4 parameters of price, you will not do well in trading. Anything, whether it's gold, currency pairs, Bitcoin, or any other cryptocurrency, or indices. If you do not understand the 4 parameters of price, you will not do well. It's not a cost, it's a promise. So you've got to, it's just like I say, my kids who come back from school and they talk about the unit of life is the cell. So you go from the cell, then the cells come together to form tissues, then the tissues come together to form organs, then the organs come together to form system. And that's what the body is made up of. You cannot just go straight to systems or to organs. You've got to start from the cells to understand how the organs work. So in trading, you cannot do well if you do not understand OHLC. It's impossible. Now, for Forex trading, the fifth one is not really necessary because it's all independent exchanges. There is no one exchange in Forex trading. So V doesn't really apply in Forex trading. So we look at OHLC, open, high, low, close of price. Open, high, low, close of price. So in this example here, I would have had 750 here. Then that's the high. Then the open would have been 500. No, the close would have been 650. Then the open would have been 500. Oops. The open would have been 500. And the low would have been 350. Everybody still with me, yeah? And what if we join the open and the close and make it into something like this? Oops. Yep, make it into something like that. And then we then take this and join the high, and take this here and join the low. What does that look like? In the chat box, someone type. What does that look like? Thank you, Buchi. That looks like a candlestick. Absolutely. Because if I take off this thing here and this thing here, I have something that looks like what you find on your trading charts. I have what looks like what you find on your trading charts. Yes, I have something like that. I have something like that. I have something like that. I have something like that, something like that. So when you see any of these things on your chart, don't get confused. They're called candlesticks. And what candlesticks are, the candlestick has got, every candlestick has got this bit here that is called the body of the candle, like any candle. And this is called the wick of the candle. So there's a top and the bottom wick of the candle. Just like you have any candle. Every candle has got, even though most candles have only one wick, so you burn it from the top. But there's a potential to also have the wick from the bottom if you cut it off a bit and let the rope come out. And you can have 2 wicks up and down. So it's the same thing. That's why it's called a candlestick. Now, in this example here, what do I have here? That's my open price, O. That's my high price, H. That's my low price, L. And that's my close price, C. So that's why I get my OHLC. And in this example, what do we notice? We notice that price, actually, the open price is here and the close price is there, which means that price went up at the end of that day. So Oga Tony sold up. So he finished in the day higher than where he started. He started at $500, 500 Naira, and he finished off that day at 650. But sometime in that day, he sold to somebody at 750, as well as someone at 350. And every other thing is in between. And that's what is covered in this body area here. All the other things he did in this body area here. Yeah? Is this clear to most people? I know that some of you who are not.
Yes, it's clear.
Thank you, Mabel. Thank you, Erwin. Thank you. So in this example here, so what did we have? We had close price finish above the open. And so what's that? It means it went up. When we have a situation like that, we call it a bullish candle. So when the close price of a candle is higher than the open price, we call it a bullish candle. So when you see those things on your chart, please do not tell me it is green, it is green, it is buy. Green does not mean buy. Green only tells you that in that period, in that candle period, that the close price is higher than the open. Now you can make a decision to buy based on what happened there. But a green candle does not automatically mean buy. Because when you have a gap up after a green candle, you should not be buying, at least in the short term. So you can be selling when you have a green candle. Don't get confused. I'm just saying. So never ever mistake a green candle for buy. That's what new traders do. They see green and they say, hey, green, buy. And then the next thing, price does what? What price does? Price does what price does. They see this green, okay, they see green, 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 and then they or maybe let's do from here. Let me actually get a blank chart. And so what do? They see green, 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 green. Oh, green. They buy. And then what the price do? Oops. And so they see red. They say, I sell. They sell and price did what? Oops. And then they turn around and say, oh, my broker is against me. My broker is against me. My broker is haunting me. This little man, they're haunting me. It's a lie. Nobody's against you. You just don't know what you're doing. Does that make sense? Daniel is doing all manner of things on my chart, on my screen. Yeah, does that make sense? Now you can see this is a red candle, right? That's a red candle, but in reality, if you know what we know, you will be buying here, even though this was a red candle. Because that red candle is a pattern on its own that suggests I should be buying and not selling. But someone who says, oh, I see a red candle, that means I should be selling, would have been getting it wrong. Yeah, before we get into techniques, let's still stick to just the basic stuff. I need to close one more of this. So it's easier for me. Yeah, so every candle has got a body, then it's got the wicks on the high and the low. The higher wick is called, where it stops is the high price of that period. Where it stops is the low one is called the low price of that period. And depending on whether it is price closed up or down. If it closed up, we call it a bullish candle. If it closed down, we call it a bearish candle. So it means then that if I want to draw a bullish candle, now what I would suggest to most of you listening to me now is just scribble on your paper what you call a green candle, a bullish candle. That is that. Then I can also scribble a bearish candle. And what I want you to do for me is to just show me with an arrow whether this is correct or not. Is this correct?
No, coach.
Someone says it's not correct. Is
Not
that
correct.
No, Daniel, don't do that on my screen, please. If not, I'll stop you from being able to do it. So just don't scribble on my screen. If you want to ask questions, type it in. Or when I let you ask questions, then you can ask questions. Yeah. Right, because if not, you're confusing folks on the session. So is that correct? Is that correct? What I just drew here now, is that correct? Someone says no.
No, coach.
Joseph says no.
Yes, coach. No.
Why is it incorrect? Nkunchi says no. Kenneth says no. It is incorrect. You are correct by saying it's incorrect. Because when I have a green candle, I represent it by green, it means that the close price finished higher than the open price. So anyone who answered it right, good for you. Now, Color does not make money. Color does not make money. We only use the color to represent a concept. So we use colors to represent concept. Does not make you money. So don't get hung up on all those kind of things. That somebody else's chart is white and black. When you're having a white and black color scheme, most times people use white to represent a bullish price action, and people use black to represent a bearish price action. So when I'm drawing this on paper, like I do every time, when I draw on paper, I usually will draw my bullish candles like this. And then I draw a bearish candle like this. That's what I will usually do. Yeah, the color does not make you money. Just understand the concept. When I have a black shaded candle, it means that price closed lower than it opened. When I have a clear one, it means that price closed higher than it opened. That's what it is. Now, why do people call things bullish and bearish? How does a bull attack? How does a bull attack? The bull takes the horn and goes down and lifts people up. So it goes boom and lifts people up. And that's why it's called bullish, because it goes from down to up. That's the way it attacks. And so when people talk about a bullish move, it means that the buyers have decided to take over. So they are attacking from a place of low to go and then going up. How does a bear attack? A bear tears down. It holds, tears down. So it goes from a place of high, wherever. What am I looking for now? Gradient or higher level, and pulls down. And with the claws, just imagine running the claws on the blackboard. Yeah, the bears go like this, and that's why it's called bearish. Nothing. So don't get hung up on these things. Just understand the concept. Bullish, price is going up. Bearish, price is going down. When I call it bullish, and don't just talk bullish bearish. I've heard people say bullish bearish, bullish bearish. What does that mean? Tell me, is that a bullish candle? That's what we have just shown you now. So we have and so when I'm going to be drawing this now, I will represent them by just like I have them in my charts. So I have a bullish candle here. I also have a bearish candle. But you know that in trading, we don't just have single candles. We do have groups of candles. So when I have a group of bullish candles going together, do you notice what is happening? It is going up because it's bullish. So the close is there, the next open is there, the close, so the close is there, the next open is there, then that one is closed there, and the next open, close, next open, close. So price is constantly going up. So when you have a group of bullish, a group of candles like this, we will call that a bullish move. That's what I call them, just for clarity. That's a bullish move when you have a group of candles. Now, sometimes you will have one red candle come in between there. That's okay. We have it everywhere on the charts. So we have generally, see what price is doing, is going up, but then we have some sprinkles of reds. But the predominant move, action there is a bullish move. Yeah, the reverse is the case when I have. Wait a second. Yeah, it just keeps drawing it as a second for me because I have this thing turned on here. Let me turn it off. Into shape. Yeah, so we have this. So we have predominantly a group of bearish candles. Timothy says my screen is blank. Is that so for everybody? Is my screen blank?
It's fine for me, coach.
No.
Hey, Timothy, you need to maybe look at your device. It isn't blank. Thank you for confirming. Thank you for participating. Yeah, thank you. Right, so
Okay, I'll check it.
Okay, when I have a group of bearish candles, then what I have in that situation is what is called a bearish move. I know some people in their mind said trend. It is a move. Bullish move, bearish move. This is move. When you just have a group of candles, you get a move. However, when you then have a group of moves all going in the same direction, what do you get? What do I mean by that? Price usually, if it's going up, is doing this. Yeah? But what we have there is a group of green candles coming this way. Then you have a bearish move. Then you have a bullish move. Then you have a bearish move. Then you have a bullish move. Is this making sense to anybody? But when you have a collection of moves, of opposite moves, bullish move, bearish move, bullish move, bearish move, and it all goes in the same direction, that's when you then have a trend. And so if those collection of moves are then going up, you have a bullish trend. When the collection of moves are going down, you have a bearish trend. Does that make sense? Does that make sense? Yeah, Angela, I see you. Kenneth, I see you. Thank you. Joseph, I see you. Thank you. Thank you. Awesome. So those are the bases. Kenneth, I see you. And Mabel, is this making sense?
Yes, it is.
Awesome. Who else am I going to call out now? Brenda, you already know this. Chappie, you already know this. Hey, my man Dipo, the man with the baritone voice. You already know this. James, you already know this. I know. Yovan, you already know this. Kwame, you guys are senior guys. Mark, you already know this. Yes, yes. Hey, Shomwale, Mr. John, I see you. Great.
Yes, coach.
Awesome, 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 awesome. So we can say, someone is asking me, so we can say that a trend is an upward or downward movement in price. Yes, it is. But then there's a definition for trends that I'm going to give you next. Yeah. Now, what do you notice where we had this move here? When we had this move here that went up, what did we notice? We noticed that price got to a point here and stopped and changed direction. Then it started to go down, giving us another move down. But then it got somewhere here, stopped, and then started to go up. Then got here again, stopped, went down. Got here, stopped, went up. Got here, stopped, went down. Is this making sense? That you're seeing places where price gets to and stops. Now, those places are called price structures. This will start you. This is important. All this things I'm saying here don't make you money. But you will never make money consistently without understanding what I'm talking here. I'm talking like a Nigerian. What I'm talking here. Yeah? You will never make consistent profits in any market without understanding some of these basic concepts. And that's why I'm doing this for free, so that folks get it. Okay, you know what I'm going to do? I'm going to kind of, just so we don't annoy all ourselves, I'm going to kind of mute everybody, and then I will unmute you when we can start asking questions. Is that okay with people? I'm just going to mute everybody. Yeah, then when we're ready to ask questions, then I can unmute you. You can raise your hand and I'll unmute you so that we don't get distracted. Yeah, so that's structure. So those things are called structures. So these things here are called structures. Price structure. Price structure. Yeah. However, when that price structure is above, so price gets to the top like this and stuff. So when that price structure is above, that is called a resistance, because you're resisting price from going up, and so it starts to come down. So that price structure that is above is a resistance. And when that price structure is at the bottom and has to get there and then bounce, that is called a support. So another way to think about it is when you look at the ceiling, when I get a bouncy ball, a tennis ball, lawn tennis ball, and I throw it up to the ceiling, it will bounce from the ceiling and come down. So the ceiling is a resistance for that ball. Then when the ball comes back down and hits the ground, it's what? Support. So think about it that way. So price has these things happening as well, all over the charts. So what did price do here? Price went up here. Oh, not a very good color. Oh yeah, Dotun, please don't draw on my chart. Don't draw on my screen, please. You see, when people come for things like this, that's why free things sometimes is just, instead of concentrating and following me, someone is messing about on my screen and distracting me and everybody else. Yeah. So I'm going to stop you from annotating on my screen. Stop all the distraction. Come on, man. How do I delete all these things that you put on my screen now? Okay. Right, so you notice what price did here. It came up and stopped here. So somewhere here, price stopped. Oh, very ugly color as well. I think this was when we were doing some stuff the last time. So let's use something like this. Yeah, it got here and stopped. Then it came again down here. Then got here and stopped. Right? Then what did it do again? It came up all the way. Oops. Came up all the way. This one was there. Came up all the way here. Got there. Stopped. Is everyone following me on with this? And then price then did what again? Came down here. Got here. Stopped. Are you seeing this now? Now, some of you are becoming consciously incompetent. So things you didn't used to see happen in the chart before, some of you are starting to see it. So you've gone from a place of unconscious incompetence to consciously, you still know you don't know this thing well, but at least you're seeing some of the things I'm talking about now. And then you still have price do this to this point. That's a major one. And then we get it, stop there. Yeah, some of you after today, you need to start doing what I'm doing here, because you will start to understand. I have a candle, then I have a group of them move, a move there, a move there, a move there. And then I have areas where it stops. Those areas are called support and resistance. So these are supports. These ones on top here are supports. And these are resistance price, resistance levels, structure levels. Remember, both support and resistance are structure levels. They are price structure levels. As soon as you set support and resistance structure, they make sense to me. Yes, Angela. Yeah, but you've got to, I know you go and watch YouTube videos and stuff like that and watch all those free stuff everywhere, and you hear people talking support resistance. Sometimes people, it doesn't make sense. You've got to, again, follow the basic principles. Cell to tissue to organs to systems. So you've got to understand them as structures, and then there are two types of structures. There are support and resistance structures. Yeah, so that is about structure, support and resistance. Now, how do I define a trend? Remember, I will have two types of trends. I'll have an uptrend, which is a bullish trend, and then I'll have a downtrend, which is a bearish trend. And we now know what that means. We know that when we have a bullish trend, we have price going up generally. And when you have a bearish trend, we have price going down generally. Don't confuse on any time frame. Don't confuse moves with trends. Moves are not trends. Moves are a collection of price action in a short-term period, very short-term period in one direction. And when you get a reversal of that, the reversal is also a move. But when you now have a collection of moves all going in the same direction, then there's a directional bias. And that directional bias is what you have as trend. Yeah. Now, how do I define an uptrend? A simple definition of an uptrend is where you have price making higher highs and higher lows. What does that mean? When I have an uptrend, price is making highs, but each new high is higher than the preceding high. That high is higher than that high, and that high is higher than that high. As well, price is making higher lows. So that low is higher than that low, and that low is higher than that low, and that low is higher than that low. Is this making sense? Now, most of you have seen this online, and that's not enough to actually make money or earn money from the market. But you need to understand those concepts, because from them you can then make money. Yeah, so that's the definition of an uptrend, is where price is making a higher high and a higher low. Yeah, and for a downtrend, this is a high here. The next high is actually lower than the other one. So a downtrend is defined as when price is making lower highs and lower lows. So this high is lower than that low. This high is lower than that low. This high is lower than that high. This high is lower than that high. This high is lower than that high. That low is lower, or that low is lower than that low. That low is lower than that low. And that's what you have as a trend. So when you look at a chart, what do we have here? When you have this high here, higher than that high, that suggests to you I might be getting a trend. But you need to look at the low. And you need to have at least two higher highs to be able to have a trend. As well as at least two. Sorry, let's say two, at least three. At least three. So here I have three, which means in this area here, price is actually making technically an uptrend. Does that make sense? Because we have higher highs and also higher lows, because that's also a low there. So this area here, price actually trended. Why do I know it's a trend? Is because I've seen multiple moves coming together to make price go in a specific direction. And that is an uptrend. the reverse is the case for a downtrend. Are you with me? Is this still making sense? Yes, no, 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 yes, no. Or you're talking a load of rubbish. I've seen all these things on the internet. Show me how to earn money. Okay, no problem. Okay, yeah, thank you, thank you, thank you, thank you, Daniel, thank you, Joseph, thank you, Kunchi, thank you, Mr. Shobole, John, thank you, Munisi, thank you, Daniel, thank you, Patrick, thank you, thank you, thank you, thank you, thank you, Mabel, thank you for participating. Right, so it is the same thing or the opposite for a downtrend. So let's delete all these objects on the chart. Delete, boom. Right, so let's see if we can find us a downtrend somewhere so I can explain the same thing. Okay, we have something close. Let's go down to something a bit smaller time frame that can give me, okay, that's not neat. I like to have a neat setup. Okay, so we have something close here. So what do we have here? Who is seeing what I'm seeing? From this end of, oh, it wasn't actually. So we need to find another one. I need to find a good example. Okay, this might do. Now, what do you need to look at this side of your chart. So this side of the chart up to this side of the chart where price is currently. So the current price action is happening here. This is the last candle. This is the current candle. Then the candle after that is the one that just closed before it. And this is a 15-minute time frame. So each of these candles is 15 minutes. So when you look at this candle, it's 15 minutes. Look at that candle, it's 15 minutes. Look at that candle, it's 15 minutes. And when you look at a H4 candle, they all look the same, like the 5 minutes. But the only difference you need to understand is when I'm on the H4 time frame, each of these candles happen in 4 hours. So I get me my open, high, low, close, all happening in 4 hours. When I'm on the 15 minutes time frame, I get my open, high, close, all happening in 15 minutes. Remember Oga Tony. Oga Tony, when did he start his work? He started at 6 a.m. to 6 p.m. So Oga Tony actually has a 12-hour time frame. That's what Oga Tony does. There might be someone else who starts at 6 p.m. and ends at 4 p.m. That person has a 10-hour time frame. Yeah, that's exactly what you see on your chart here. So all these things here allow you to see time frames. So the smaller ones are shorter time frames, and the longer ones are longer time frames. It just takes longer to happen. So if you're on the daily time frame, it takes a whole 24 hours for this candle to open and close, and also give you the high and the low. Yeah, does that make sense? Does that make sense? Yes, yes, yes. No, 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 no. You're talking a lot of crap. Which one am I? Joseph, thank you. Kenneth, thank you. Angela, thank you. Bongs, thank you. Thank you. Yeah, I see you, Limonga. Limonga, I wonder the kind of image you have on your Zoom this thing. Oh dear, 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 dear. There is something that's called etiquette of Zoom calls. You need to have a very good what do they call that thing? Profile picture, not just anything. Because what you have there is somebody let the guy with a whatever. Okay. Anyway, you get what I mean, though. I know you get what I mean. So if I go back to my 15-minute time frame, so we have, what do we have here? We don't necessarily have a proper structure. For you to say you have a structure, you need to see something like this. You need to see something, price give you something like this, not one candle close and no one open here. No, you've got to have, now some people define, again, I don't want to go too technical on this. You've got to have the low there of the candle, then you've got to have this candle opening higher than that candle. Then this other candle needs to actually close higher than this one, higher than this high here, for you to have That's what people call fractals and stuff like that. Yeah, yeah. So, but just have in your mind, when I look at that chart here, this is all straight stuff. But when I get here, I can see a clear move up. Can you see that? I get a move. I don't just have one candles. I get a move. That's why you've got to understand the cell, the tissue, the blah, 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 blah. And it is for us, the candles, the move, the trend, and then understanding structure. Yeah? So you must see moves. One move, a negative move, or one move, a negative move. You've got to see that to know that you have a structure level. And so I have a structure level here, then price then does what? Gradually, just a small one here, then gives me what again? This up here, then gives me what again? Down here, then gives a tiny one up here like this, and then down here. So in essence, when I see something like this happen, when I had the price give me a high here, but then did not come down and break this one here. Remember, just so you remember, when I had a lower low, this next low completely came below this low. But in this example here, this low here did not come below this low. So what I could have done is take away this, and then just give it one move here. Does that make sense? So what you have here is a move down, a move up, another move down that completely breaks this here and gives you a low that is lower. So what do I have? I have a high there, and then the next high is actually lower than the other high. And then the next high is lower. So I'm having a trendish kind of behavior, even though it's a very ugly trend, but it is a trend. And so what I'll be waiting for price to do then is to come down and go below this area here. If it breaks it, then we know we are going down. If it breaks this level here, we are going down. It doesn't mean I'm selling now. It just means I have to get ready. I may sell. Or because this might be a support, price might bounce just like it bounced 15 minutes. This current 15 minutes, it bounced a bit. And in reality, some people make money from this bounce here up to here. They have made this money here because this is equivalent to, it's not a lot of pips, only 6 pips. Members of my club, remember I tell you not to be looking for 6 pips, especially if you're just learning how to trade. And every one of you in this call here, especially those that are not members of the club, you're not an expert trader. If you're an expert trader, you won't be on this call. The reason why you're on this call is there is something missing in your trading journey. And that's why you're here. So don't just be teachable. We know these things. Yeah, so you're here with me because you want to pick up 1 or 2 things. So you're not an expert trader yet. So you shouldn't be looking for 6 pips like this. You're insulting this whole industry. Yeah, when you've started to do well and you've started to hold your 10 pips, 15 pips, 20 pips, 100 pips, then you can start to do this kind of quick stuff. Yeah. Okay. So we talked about candlesticks. First of all, we talked about OHLC. Then we talked about candlesticks, which are formed by the OHLC. Then we talked about moves, which is a collection of candles. Then we talked about collection of moves, which gives us would give us what? Trends. Yeah. Now the next thing to talk about then is, after all this story this man has been telling, how do I earn money from the market? So knowing what I've just told you now, Remember I talked about price bouncing from the floor is support. So if it bounces, it means the price can potentially go up. If I know the price can potentially go up, what should I be doing? If price can potentially go up, Angela, thank you. If price can potentially go up from what I am seeing, what should I be getting ready to do? Someone says, open a buy position. No, Angela got it right. Just look, evaluate whether I should buy, not just buy. Evaluate. Thank you, Erwin. Says buy opportunity. It doesn't mean buy guarantee. Buy opportunity. Are you with me? Don't mind me. I mess about like this all the time. Yeah. So you want to be looking to buy. By the way, yeah, to just show you some of you that are not members of our club, we see these things every time. So this is our club. This is our club. Someone just posted their result today. Thursday glory, he calls it. Now, by the way, this person here, Samson, we know him. Samson this morning, I'll just show you what he said this morning. Samson comes out this morning, he says, success isn't doing great things sometimes. Success is doing small things every day. Today, I want you to begin your day with a smile on your face. Be positive, love the word, and say it out loud. Today, I'm gonna be a good day. He says, sharpen your knives and let's go for the hunt. The market is waiting. This was by 10 minutes past 6 this morning. Then, by 7:30 p.m., Samson comes back. What does he show me? What does he show me? Nice results. Woo! So it is possible, right? Yes, it shows me results. So it's not Chima Nwokoro's result. I have my own results. It is Samson's results. And before Samson sent us his results, we have Baba trading currency pairs, $4 a day. If you're doing $4 a day and your account is $100, that's 4% a day. That's insane. Don't get angry with the $4. Just increase the account balance. But by the way, Baba, stay the way you are. Just keep growing. I know you. So some people don't know you. Just keep doing what you're doing. Yeah? Who is this Mike here? Insane stuff. Again, look at this. Just look at him withdrawing $367 from today. Not yesterday, today. I see these guys here. Mike, I know you're on call. Next time I come to London, you're taking me out. I was there on Sunday. I missed calling you. You're taking me out next time I catch you in London. I'll be there because I come. Yeah? Mike, where are you? Yeah, because how does he make $367 in a day? That's crazy stuff. That's Mike. Then you see Bucci here. Where's Bucci? Where's Bucci's result? I saw Bucci's result today. I don't see your result today, Bucci. This yesterday. Who is this? This Choma. 115, 325, 236, 830. I don't know if this is dollar or naira. The same Choma lady did $9 yesterday. Boom! So the question is, how do I then take some of this concept that you're telling me now and make money? Mabel, I'm looking forward to you doing this. Mabel is one of our newest members. I keep calling her name because the lady is on fire. She's learning, she's doing things, and she asks questions. And I know from people's questions how far along they're going. And so Mabel, keep doing it, keep doing those things, you know? Yeah, but the point is this. Yeah, but the point is this. If I knew price was going to come here and potentially give me what? Can you see what's happened? I don't know if this is going to keep going up. I don't know. I don't even want to know. Yeah. And so if I check how much price from the open has got to, is now at about 10 pips. So it's giving me the 10 pips I was looking for. Okay, I could have taken it and gone away. Now, depending on your account size, if you're trading a 0.01 lot size, which is the smallest lot size, that's $1 in 30 minutes. If you're trading a mini lot, that would have been $10 in 30 minutes. If you're trading one standard lot, that would have been what? $100 in 30 minutes. Boy, oh boy, boy, oh boy. Who can't do this? Anyway, yeah. So think about this. So the question then will be, when I find this kind of thing happening in the market, where is the best place? Because I know this is an uptrend, right? So in an uptrend, I should be looking for opportunities to buy. I should not buy because it's an uptrend. I should look for opportunities to buy. So where would have been the best places to have bought? So I'm going to label this A, B, C, D, E, F, G, H. So where would have been my best places to have bought along this price action? Oh, I see you, Mike. Where would have been my best place? Okay, someone says A, C, Bucci. Someone says C, E, G. Okay, I like that, Albert. Who says B, D, F, and H? Yeah, Eric says C, E, G. Okay, so all of you know already. So why are people not making money in the market or any money in the market? Someone says A or G. Okay. Yes, Angela, I see you. Is it because A and G are your name? A, Angela, A-G. Yeah, I'm messing about. No. Yeah, so why are people not making money? You can see these things. So why are people not making any money in the market? Because if you know that the best place, and you're right, C, A, C, E, G are the most discounted price levels for you to buy, not to sell. For you to buy, the most discounted price levels in this thing that we're seeing now are the A, C, E, G. And so the question is, how do I know what will become an A? How do I know what will become a C? How do I know what will become an E? How do I know what will become a G? That's the question. That's the biggest challenge for people. How do I know? How do I know? Right? Angela says, yeah, I don't know. Yeah. How do I know? That's what people say. And so there are different ways you can find out. So if I looked at that chart that we had open, how would I have known that this price will stop here and then go up and then stop here and then come down? How would I have known? How would I have known that I could have potentially, now this is the downtrend. So how would I have known that potentially I could be selling here? How would I have known? Angela says, yes, you must use the past action. You must use it. But if you remember, unless you have understood what I talked about when I said moves, you will not pick this up. But if I knew the preceding move, I can use various techniques. One of those techniques is maybe using this thing that is called a Fibonacci retracement tool. And I go from the beginning of that move, the prior move, to the end of that prior move, and I stop. Wow! Price came to this line here and turned. I had that line preset. So what if I had this preset and then watch price come around these lines here and take a move, a sell? I could have cut this move down one time. I could have even cut the small one here. Now, in reality, there's something we call our sweet spot. Our sweet spot is this area here. 38.2 to 61.10. I won't tell you why. You're not a member of the club. If you're members of the club, I have the information there. But that's our sweet spot. So as long as price comes into this area, we're looking to sell. So when this thing, because you wouldn't have known it would have come up to this point. So when you started to see this retracement here, remember you get the retracement. I have a clear close above this high here, and I have an open above this high. So I have me here a clean price structure level. When price got to my sweet spot, I could have sold here. And then price actually moved down and gave me about 17 pips. So I could have made anything from $1.70 for a 0.01 lot size to maybe, if I'm doing a one standard lot, that would have been $170. Who would have loved to have walked home with $170? Okay, but okay, maybe you did not, that did not pan out for you and you lost that trade and it came here and you lost 13 pips, $1.30. When price hits your 78.6, which is a deep retracement, you wait for price to break the low and you then start to flow. Now, we have a tool, members, we call it the wave, that can also help you spot those areas. So I would have been taking this shot here to get my 13. Then price came back up and did this. Then I'm looking for a close below probably that low there. And I'll have then followed this all the way down, which gave me about 50 pips. So 50 pips again is 50 times, if it's a 0.01 lot, that's $5. If it's 0.1, that's $50. If it's one standard lot, that's $500. And in how much time did that happen? You got filled in there, and in 30 minutes, you had 45 minutes max, you had 50 pips. Now, you might have lost one trade there, which was 13 pips, but you've just made 50 pips here. So when you lose $130 and you make $500, would you always take that if you see it? And that is how folks like this are not scared of losing, because sometimes they lose trades. Look at Mike. He withdrew $367 of his profit today. But when you look at his trades, he has some that are losses. But look at his losses, 0.8, 1.36. Look at his gain, 362, 247, 7.4. 0.97, 1.0. That is insane numbers there. $12, $14, $15, 0.6, 0.3. So there are times when you have those kind of things happen. Don't worry about it, because when it happens, you could have made money. You could have taken some of the profit, and then price hits you on this one, on the partial. Then you got into this trade again. Yeah, depending on the low of this candle here, you'd have gone in here according to the wave strategy, and that's $50, right? 50 pips, right? Questions. Should we take questions now? 15 minutes to go, because sometimes it's not just what I say that matters, it's what you want to understand about what I say that actually matters. So let me take questions. So if you want to ask a question, let me just raise your hand and I'll unmute you. Just see, you can see when I talked about where will you know price, see price is bouncing everywhere and then giving us opportunity to make money. Bounce, opportunity to make money. Bounce, opportunity to make money. Bounce, opportunity to make bounce. Oh, come on, man. Okay, Kenneth.
All right, thank you very much, sir.
Yes.
I am not on the team yet, and I would wish to join. But sorry, when we started, we spoke about what did you call it again? Okay, a strategy that works or something like that. So I don't know, please, is it possible you tell us the strategy you use?
The strategy I use.
Yeah.
So okay. Strategies I use. Again, members of our club know the strategy. So we have a couple of strategies. There's a 5TT gap, which is not what I'm teaching now. There's a 5TT gap.
Okay.
There's the ERX gen. I'm not teaching that now. There is the London Open breakout, which I'm not teaching now. And then there is the wave strategy, the 5TT wave strategy, which is partially what I'm showing you here now. What other strategy do we have? And then within the wave strategy, we've got 2 or 3 rules of when we can get into trades based on the wave strategy. Yeah,
Okay.
So we've got a couple of strategies we can trade.
Okay.
So what I've shown you now is you need that information to even be able to do strategy. If you don't know these things I've talked about, the candlestick, the moves, the structure, if you don't know those things, forget it. You can't make money. Don't be deceiving. No, but I'm being candid. I'm not being rude. You're deceiving yourself if you think you can make money in strategy without that. So any other question? Hands up. Any other question? Any other question? What? Okay. Dominic, I'm going to respond to you now. Yes, Dominic. Yeah. Any question? Any question? Any question? We're going to finish in 15 minutes. Albert says, can I pay $37 to join? To join what? To join the club? So even if I told you to join my club, it's $37. Should you not say to me, coach, that's insulting the market? Because you just seen somebody do $367. Should you pay only $37? No, it's not $37. To join our club is a one-time payment of $297. Yeah. I'll answer your question. There are 2 questions there I'll answer, but let me just say this here to tell you a bit more about the club so that some of you will not be asking, what am I going to get for $297? That's what some people ask. So we have 3 things that our club is majorly about. Yeah. So we have the education, if I can spell. Then we have the tools to help you in your trading. Then we have the ongoing support. So these are the 3 distinct things I do for traders. Education. If you're a new trader, you must take our foundation courses, which is basically some of the things I've talked about tonight. Because without the foundational topics, you can't make money with just foundational topics, because it don't teach you how to buy or sell. But you cannot engage in strategy without that foundation. And this is the mistake a lot of people make. They just jump straight into trying to make money without the foundation. And so they wonder why they're not making money. You can't. It's not a curse, it's a promise. I promise you that. You'll make money. But you need the foundation, and then we start looking at the strategies. So the gap, the wave, the ERX gen, the LOB, the reversal, candle reversal. So we have all that as then strategy, yeah, in the education side. Now, you will notice that when you're trading, sometimes you also need tools. Just like anybody that has the skill of furniture making. You have the skill of furniture making, you've learned about it. Now you need the tools to then help you make the furniture. Now, the tools on their own don't make good furniture. So don't go after indicators and all those things before knowledge. You must get the knowledge first. before you get used indicators and the auto systems and all that effectively. So in the tools, we've got indicators that members get. Actually, the members of the club get. I don't know if I have my FTT club members area. Yeah. So that you can see some of these tools here that we use. Come on. You know, I don't even have the access to this now. Dominic, can you drop me the link to the oh, he's here. I got it. So within the members, within the club, we have the courses, which is what I just talked about, the education side. So the education side has, in fact, if you've not traded before, everything from how to open an account, which brokers to use, and all those kind of things. We have it there. Then the foundational topics, the wave strategy, the London open break, and the 5TT gap, the ER exchange, the candle reversal. When you go into something like, say, the wave strategy, which is partly what I talked about today, then you have a breakdown of the courses. So everything down to section 2, then we've added up to section 4. Section 4 is a new entry rule that I just released in the past couple of months. And I'm working on another set of rules around this, which is you can use all these rules to enter trades with this strategy. So you can have up to 3 trades you've entered based on these different entry rules. And so we have all those sort of things there in the rules and the courses. Then you get the tools. Then within the tools, members get, again, World Game Plan. We explain all these things to you. You then get some of these indicators which are sold to non-members. So the ER exchange breakout, the London Open breakout, these are all sold to individuals. But members get them for free. These ones are for free. The 5 candle reversal, the 5TT risk management tool. 2 things that make people lose money in the market. They are trading 2 big, very large lot size. I think I said this on Sunday. Large lot sizes, and also they're not using stop losses, so they are not protecting their capital. That's why you lose money. The risk management tool helps you solve that problem. Yeah, and then you have other indicators that you can also get. Members get every other thing at 50% discount and stuff like that. But you don't need any of the paid ones at the start. So stop looking at paid something at the start. Start making money first with the non-paid stuff. Then you can start moving to some paid stuff, as it were. So that's the members area. And then we every Sunday night under the so all these are indicators and tools that you can use. Then under the ongoing support, you join our Telegram group. We used to be WhatsApp, but we're now in Telegram and Facebook. We're not very active on Facebook, but yeah. Then every week, every Sunday night, I do weekly calls. So live calls like this for members, answered questions, teach on various topics and various things. And also, if there are gap trades on the day, we also execute gap trades on the day in the night when we have those calls. So members have this, and then you have the tech support from my team. So I have a team, my staff, we also get support from them as it were. And if you're on our VIP program, then you can have one-to-one sessions with myself and with some of our top traders. One-to-one sessions, but that's VIP clients, as it were. So that's the club. That's what I try to do for traders. And I've just given some of you, members know this already, but those of you that are not members, a sneak peek into the Telegram group and see what some members do. Some of our members are very conservative. They don't like to share those kind of results. And so they keep it away from people. And some of them are laughing now, and I'm seeing them. And so they don't talk about those results. There are folks that are making in 1 month, 2 months, are doing 50, 60%, so doing 100%, and stuff like that. So it is some real stuff, as it were, and we're not messing about. here at all. Let me see if I can. Let me just do something that I normally don't do, but just show you that this is for real. What date is this? I've just taken the screenshot, yeah? What date is this? 29th. What time is this? A minute after 6. So that was the text message for those of you that came early, that was the text message I said I got. This was a transfer from a trading account. How much is it? This is in Naira. This is one of my Nigerian accounts. So this is in Naira. How much is this? Would that be nice for you if you can do something like this? So it's no need trying to make people feel that you can do this. I don't show these things off like this. Our club members know. I don't even show them some of my results of that. Yeah, but the point is, this works, and it can work for you if you knew what to do to make it work. Yeah. Yeah. So let me answer those 2 questions. I've got a call in 6 minutes. We make money every day, non-stop. Hey, how about this? How about the best decision I've ever made to change my financial situation. Top man, you're a top man. That's one of our coaches, by the way. And he's been in the club since May last year. So he joined the club May last year. The guy he's one of our coaches, as it were. So the VIP clients will have, some of them will have him as a coach. The best, yeah. So someone asked, are you into account management? We are looking at working on something. I tried something out at the beginning of the year. It didn't quite, a lot of complications around it. And I just decided to change the way it works, but I've not yet come up with the way. We have something in the pipeline, but I don't normally do those things. I rather show you how to do this thing because everybody can do it. The problem is that people are gambling and people are greedy, trying to make too much money in a short space of time, and then they get beaten by it. They lose money that they cannot afford to lose, and so they now get demotivated. They don't want to do again. Stop it. Just learn how to do this thing. You don't earn all your, if you're working for a company, you don't earn your 5-year salary in 1 month. You work every month, they pay you monthly. So why are you coming to trading and trying to earn your 1-year trading returns as a new trader in 1 month? Which kind of thing is that? That is greed. And some of you are spirit-filled and you're still greedy. Stop it. I still love you. Someone is asking me, do I trade signals? I answer that question first with a question, then I qualify it later. And the question I usually ask that question is, do you know anybody who is very successful copying trade, another person's trade? As in copying, not when I mean copying is trade signals. You can have trade copy that is direct into people's accounts and they work. But have you seen anybody you know that is doing trade signal and is a rich person? No. And it's not because the people giving the signals are bad people. It's just that way of trading is ineffective. It's just inherently ineffective. It doesn't work. Why? Because the person that is giving you the signal might be in Australia. He gives you the signal, you're in Nigeria, and you're snoring when he sees the signal. He sends the signal out, you're snoring. You wake up 5 hours later. You say, okay, let me buy. When the guy has already taken his profit and walked away, did you not see me show you now in 30 minutes? Someone has just taken $500. Now you're snoring. The person has taken the profit. You now wake up, you want to take the signal. And then you get it wrong, you blame the guy. But no, it's not the guy's fault. You were sleeping when he gave the signal. Or The person is on holiday with his family. You think if I'm on holiday with my family, I'll be thinking about giving you signal, and I'll lie with that. And so you are there waiting to grow that your account and waiting for my signal. But I don't give you the signal because I'm with my family. Or maybe I'm sick in the hospital. You're waiting for me to give you signal. It doesn't work. Not that people are bad. It's just not an effective way of trading. Learn how to trade, folks. Learn how to trade. Don't be looking for shortcuts. There's no shortcut. What else? Good point. Yeah, I do trade. I try to coach. This is one of my passions, to be able to help folks to do this. Do I need to change my broker at joining your club? No, you don't need to change your broker. Can you explain more? But maybe you find out that by the time you join and you learn one or two things, you might then be able to analyze and evaluate your broker a bit better. And then you can make the choice whether you want to still stay with them or leave. Can you explain more about, by the way, Dominic has dropped the link to the to join the club. No waste time. Just Dominic, that message was direct to me. You need to send it to the group. Someone says, please, how do we enter a trade? So Kenneth, so let's say I've got literally just minutes. So let's say you see an opportunity like that and you see that you want to buy around here. Yeah. So you need to know what price that is around there. So that's your entry. For you to enter, you also need to know where you put your protective stop. So your protective stop loss will then determine what size of trade you take, whether it's 0.01, 0.05, 0.022, 0. Whatever. Yeah. And so you will then buy with maybe 0.02. And you can also determine where your take profit will be, which in this case, maybe this is 25 pips. You can decide to take 25 pips in profit. You can decide to take 35 pips in profit, whatever is the case. And that's so in concept, you've got to understand concept then before you go into tactic. And so on the trading platform, if that was the opportunity I saw there. So if I saw this and said I want to buy, you shouldn't be buying when price is doing lower lows and lower high. As a new trader, just trade in the direction of the trend. So wait for this price to come back up here somewhere, and based on certain rules of the strategy, you can then sell. So let's say you decide to sell, let's just say, for instance, this is not the real place you want to sell. That you decide to sell here, where price is now, and your selling price is 1.9916, and maybe you want to stop loss here. Maybe you want a stop loss here, and maybe you want to then take your take profit just around here. Yeah. Then what you would then do is to, with the risk management tool, I know that this is how many pips. This is about 20 pips. I can go to the risk management tool, and that was what was that again? That was GBP NZD. So I can go to the risk management tool, and I can go to GBP NZD. So I can go to GBP NZD. I can say my stop loss is 20 pips, and I can calculate. And so it's telling me I should use a 0.18. If I'm risking 1%, I can choose to risk 0.5% and calculate is 0.09. So I can now come back here and go new order 0.09 for the volume. And I know that the price, I'm waiting for this price to come here. Then I can put my stop loss as 1.9933. Then I can put my take profit as 1.98,920. Yeah. And I can choose to now sell this if that was what I needed to do. Does that make sense? I can hit sell now on this, and that's it. So, so I hope, Kenneth, I hope that helped you out. Someone says maybe from point. Okay, okay, no questions here. We'll be jumping out in any second now, folks. Can you explain? Okay. Someone says, can I explain more about pips? Do I need to, can I, so Munisi says, can I explain more about pips? Now, to talk about pips, you've got to think about, because pips usually really apply only to currency pairs. So what do I mean by currency? You should know currency pairs now already. Now, all these things are basic things that you will learn. So currency pairs, so let's say GBP USD. They are pairs. GBP is a currency from Great Britain, Great British pounds, and USD, which is the United States dollars. They come together. So you always trade currency in pairs. Yeah. So GBP USD is a type of a currency pair. But there are also currency pairs that contain this thing here called JPY, which is the Japanese yen. Yeah. So any currency pair that contains Japanese yen is treated differently in the pips compared to any other currency pair. So every non-JPY pair, the pip is the 4th decimal place. So this is 1 pip. For usually anything that contains JPY, it is 2 decimal places. That is the pip. So when I go to my chart, the currency pair here is GBP NZD. That's obviously a non-JPY pair. So I should be looking from here to here. The pip, the difference there is 1.9330 to 1.9913. So the difference is 1.9330, 1.9330 and 1.9313. Yeah. So it means that the 4 decimal places, that's the counter. So that's from 13 to 30. And that's how many? 17 pips. Because that's 0.0017. That's 17 pips is the difference. Yeah. And if it's JPY, I don't have enough time to break this too much down, but we've got content on this actually. Yeah. So but that's the way to count it. Now, the easiest thing to do is you can use some hacks, some shortcuts. If I want to see this, I can use this, put the crosshair. So this is the crosshair. I can put it there and then click number, I see there. That's actually 19.6 pips. And for the take profit, that would have been, in this example I gave, 21.7 pips. Yeah, so that is that. If you put on a JPY pair, so this is AUD JPY in this case here. So in this case here, if we're using the one of the entry rules of this strategy now, we would have been looking to get in around here. So whenever price comes down here now, we'll be looking to sell this currency pair. So that's 80.93. And maybe I'm targeting my stop loss to be around here. So when you look at it, it's 80.93 to 81.06, 80.96 to 81.06, because this is a JPY pair. We're looking at the 2 decimal places. So 80.96, so that's like 96 to 106. So that's in essence is 106, which is 10.6 pips. And maybe we will now be looking to take profit. Where do we have a structure? Let me take profit around here. 1-to-1, maybe do 1-to-1. Something like that. Yeah. And so we'll wait for price to come down. It's coming. We can do what is called a pending order. So before I do that, I know I need to check what my lot size is. So this is about 10.7 pips. So again, I'll use the risk management to find out how much pips I need to use, and then I can now take that trade. As well. Okay. Send us an email if you have any question. The easiest thing to do for you is to join the club. Okay. And please repeat what you said. Hey. Henebe, ask the question in the members area. You remember already. And you're typing in capital letters. When people type in capital letters, it is like you're shouting or you're emphasizing. So I don't know if you're shouting or you're making an emphasis or you're just telling me. Yeah. Where's the risk management tool? Mabel, the risk management tool is in, so if you come in the members area, yeah, everything will be like this for you. When you sign, when you come on, go to the tools and access indicators and expert advisors and all those sort of things. When you click on it, it opens up this page. The risk management tool is here. So it's zero, it doesn't cost you anything. Just click here and you can download it. Yeah. Right. Great session as always, Coach. Mike is the man. These guys are just on the way to. I'm looking forward to $1 million guys in the next couple of 1 or 2 years. The $1 million guys. But first of all, we'll get to the $100,000 guys, then to the 200,000, to the 500,000. Some of you need to get to the $1,000 guy. You need to be the $1,000 guy, then to the $10,000 guy, then to the $50,000 guy. Then 100,000, 200,000, 500,000. But in the next 2 years, I'm looking forward to $1 million guys. As it were. $1 million. In Naira, you're already $1 million. Some of million Naira. A lot of you are million Nairas already. Yeah, so you can't be trying to do $1 million Naira. That one is small money. Yeah. Same thing with Rand. Same thing with cities. Yes, yeah. Ghana cities, yeah. Can you repeat what you said about GBP and JPY choosing? Oheneba, you are a member of the club. So go to the courses, go to foundational topics, and you can see understanding pips here. Can you see it? It's there for you, understanding pips. So go watch it. Yes. Mike, you've done $400 in 2 weeks. Top man from my teachings. Thank you. This is what I said. What I said, Mike, earlier when you were not here is next time I'm in London. Last week I was in London. Last week Sunday I was in London. A couple of days ago. I was in London. I failed to meet up with you. Next time I'm meeting with you, you're buying me a drink. Yeah. You see, Joseph is asking about indicators now. You don't need indicators. Oh, how do you try to build furniture? And the first thing you're asking is about the saw and the hammer and the. It's not the first thing you need. The first thing you need is to get the knowledge to know how to use the saw and the hammer. Indicator doesn't make money in the hand of someone that doesn't know how to trade. Again, it's the mistake people are making everywhere. Yeah, okay. So I gotta go now. I've got another meeting with my siblings. So I gotta go. Right. So any other questions, members, please. I don't hope it was useful. When I do this live session, sometimes it's just to bring out some of those things that are salient that you might not hear in the videos, but you hear me say them. And when I draw things here, you see those things happen, as it were. Yeah. So thank you very much for sparing your time with me. It's a very important resource. So I don't mess about with it. So thank you for spending your time with me. Those of you who are not members, join the club. Those of you who are members, do the work. And let's get to this $1 million man, as it were. Okay. Until next time, you take care. See you.